Our guest is David Burrows today on Market Call. We're talking about North American large caps, and we're off to Orangeville, Ontario for David. Hello, David.
Hello. How are you today?
Good. How are you?
Not too bad. I'm just wondering about Talisman, and I'm wondering if David sees this as a takeover target. And I'm just wondering where he sees oil in 5 years' time.
Can you crystal ball that far forward for us?
I wish I could. David, there's a couple of issues here on Talisman. First of all, in general, the very large cap Canadian oil companies have not been an overly productive place to be over the course of the year. There is no clear theme involved here. So what I would say is investors are not making a bet on higher oil prices. The companies that tend to be doing well are those that have a very low finding cost and are using technologies to add to their reserves and their production. So we are focused in companies like that. And there's several that I could point to. Whitecap might be one, Pioneer Resources in the US, PXD is another. And they've performed well all through the year. Now, on the Talisman, clearly, you know, the news this week that there's a potential catalyst with Carl Icahn certainly makes more attractive to investors. You know, there could be a near-term catalyst. We don't tend to make investments looking for a specific catalyst to happen for us to make money. We'd like to buy a good business that's getting better to begin with and then see additional catalysts. So we talked a lot about this one, and at this point we have not added any weight to the portfolios here.
You mentioned Whitecap Resources, WCP, on the TSX. It's already up 63.5% over the last year, but the street figures there's at least another 10% to go.
They've been incredibly efficient at finding new resources. The stock pays close to a 7% yield. They have been
and that's sustainable?
Yes, they're making their distributions and doing their CapEx and growing their resources and their production. So that, to me, is a much more attractive proposition. Pioneer Energy would be the same.
Okay, David, thank you for joining us from Orangeville, Ontario. We're off to Calgary again for Blaine. Good morning, Blaine.
Thanks for taking my call. I'm thinking of taking an initial position in Amazon. I generally hold a stock 3 months to a year. I just wondered what David thought of that.
Sure. So, Blaine, we talked at the beginning of the show about consumer discretionary. Within the consumer discretionary space, the web-based consumer discretionary companies are performing the best. So if you look at bricks and mortar retail, they in general have been mixed through the year. Certainly Amazon is not that picture. Now, you're not buying it because they're making a boatload of money and their margins are fabulous. You're buying it because they have the dominant position in online retail, and there is a big secular long-term theme there. So you're buying their dominant position and their ability to push additional product through that channel. We own Amazon. We also own an ETF that invests in a basket of these. FDN is the call signal. That's the internet retailers, and I think that both are very attractive. And you know, they're higher volatility, but I think that they are participating in one of the core themes in this market.
Thanks, Blaine, for the call from Calgary. David Burrows is here from Barometer. We're talking today about North American large caps at 1-855-326-6266. Give us a shout if you'd like to join in on the conversation. We're back after this brief break to talk about REITs.